Hello guys, welcome to the video, and today we're going to talk about an interesting topic that I hope you're going to enjoy. So today we're going to talk about order blocks and how you can find order blocks and how you can trade on them. So before I go there, I just want to mention to you guys that one of the most important things in trading is to have a better risk to reward ratio, and what I'm going to show you today, it is going to help you with that. Why? Because if you have a better risk to reward ratio, it will help you when you're having a losing streak. So the real goal in trading is to master your strategy with a very favorable risk to reward ratio, because it will help you in a long run. So what is an order block? An order block is considered to be a market behavior that indicates pile up of orders from banks and institutions. Or you can say an order block is a special type of supply and demand zone that forms or that comes into the market from banks buying and selling. I think that you can understand. But if you don't understand yet, don't worry, I got you. There is a lot that goes into it. Basically, an order block in a bullish market is the last bearish candle that triggers a break of structure or a break of a higher high, whereas a bearish order block is the last bullish candle that triggers a break of a lower low. I know this is sounding so confusing, but let me make it simple for you guys. Guys, what you have to look for is a market which is uptrending when you're looking for buys, right? So this is what I'm going to show you. It is so simple, you guys. So how can you identify that this market is going on an uptrend? So simple, just like this. So what are these? Those are higher highs and higher lows. That's what you're going to see in an uptrend: higher highs and higher lows. I don't want to make this video so long, so let me just say this is a higher high and a higher low, higher high, higher low, higher high, higher low, higher high, higher low. So basically that's it, guys. In an uptrend, that is what you're going to be looking for. Then what is now another block on a bullish market? On this market which is going up, how can you identify that this is a bullish market, right? Simple. This is a bullish market. Now how can we identify that this is an order block? Simple, guys. How? Because of the definition of order block. What is it? An order block on a bullish market is the last bearish candle that triggered a break of structure, right? So for a good example, right, let us use this one. This is EJ, guys. This is EJ. I only trade on EJ and I love EJ for particular reasons. Okay, so what are we going to see? You're going to see a break of structure on an uptrend. That is when we're going to consider a order block. For example, this is the last lower low that the market gave us when it was coming down, right? Good. So we need that break of structure right here. That is when that happened. And what are we going to do? The last candle, that the last bearish candle, this one, this is the last bearish candle, the last bearish candle that caused that move, right? The last bearish candle. If we mark that one, if we align this one, so now what are we looking for? We're now looking for market to come back to this candle, right, to this area. Basically you can call it break and retest, but it is way different. But it is kind of the same, but it is different. Okay, so what are we looking for? We are looking for market to come back to this now, the last candle here that triggered this move going up is our order block. Okay, perfect. Did the market come back into the zone? No, it did not come back. You can consider it coming back with this candle, but that's now self-explanatory in how you're going to manage and how you're going to do your entries, but it is also a beautiful way of doing it. But I'm just going to show you how I do it and how I identify my entries and stuff. Another order block that we see here, me personally, I wouldn't take this one. I'm waiting for it to at least come here or inside here or here to this level, which is to this same level with this last candle. Okay, so do we have another order block? Of course, this one. Now we have a higher high here, this higher high here. And what happened? The last bearish candle, this one, that helped this move to break this higher high, you guys. This higher high. I hope you are understanding this. This last candle, this is the candle that we're going to identify, or we are going to mark like this. So this is how I identify my candle or my order block. This one, the last bearish candle that helped this whole thing to break going up. This is perfect. So now what did we see? Now what do we see? Now we see the market break this higher high here, this move going up, then it came back in our order block. So there are so many ways that you can enter here. You can go on a lower time frame and look for the same thing going up again. Now you're looking for smaller on smaller time frames. You're looking for order blocks on smaller time frames, then you can enter. You can see this on smaller time frames again. It is there. Each and every time frame that you go, it is there. You'll find these guys. So what are we going to do now? Now this is, it depends on how you want to enter. Some, they set an alert here. When the market comes here, they will be notified and they will react to what the market is. They will react to what the market is giving them. And some, they just take this as an entry, then they put their stop loss below here, right? They'll say this one is their entry. They put a pending order on this line. This line, let us say it is a pending order. They put a pending order there. When the market comes there, they'll get triggered in, and their stop loss will be below this this bearish order block, right? This order block here, right? So maybe their target will be this, or 1 to 3, or 1 to 4, or 1 to 5. It depends. So you can use that again, but this is how I do it. So I'm someone who like a higher risk to reward ratio, and this is how I do. I'll set an alert here, then I'll react when the market gives me an order block on lower time frames, right? I don't want to make this video long. I should have showed you everything on low time frames, the way you can find it, but I can as well make another video to show you that, guys. So some, they set another alert or a pending order on the 50% of this candle, 50% of this candle, and they react or they get triggered in. Okay, so that's beautiful. So basically how I do, right? I just want to show you how I do. I'm going to do more videos showing you guys my entries and stuff. So how I do is very simple. I use a 5 pip stop loss, and that's how I do. It depends if I'm away. If I'm not going to be available, I will put a pending order right at the top here, right at the top, in a 5 pips stop loss somewhere like this. Then I target 50 pips. That is a 1 to 10 risk to reward ratio. I target 50 pips, right? I target 50 pips, good. And let's say that is what I did, and I put a pending order here, right, where this candle here, exactly there, and the mid of this candle and the last part of this candle, right? So I put 3 pending orders there, right? So because most of the times the market will just come here, it will never reach the 50%, then goes up. So I put here and the 50% and this level. So when the market comes here, it gets me in the trade. The market hit my stop loss, so I had another one here, and what happened? I got triggered in and the market went to my direction. But if the market continued going down, I have another one here and I get triggered in and I'm good to go. But if the market continues going down, then that's another story. So let me identify another order block. Let me identify another order block here. So now we have this high, right? We need this high to be broken, right? And what happened? This here, it was broken with this move. So the last bearish candle, where is it? Here. Perfect. And what do we see here? What do we see? So if it was me, this is how I was going to do it. This is how I was going to have my entries. One, if I'm not looking at the charts, I put pending orders here, 3 pending orders, right? Each with a 5 pips stop loss. So what do we see? The first one, this one, and 5 pips is here, right? And what happened? I got stopped out. And the other pending order is here. What happened? The market got me in and continued going up for my 1 to 10 risk to reward ratio. Perfect. That's all, guys. That's all. This is on a bullish market. This is on a bullish market. There are so many guys, so many opportunities you can get with this one, and you can make money with this. This is another one that broke. This is another one that broke this high. This one that broke this high. What happened? The market came here, you got triggered in, you see, and the market continued to go on your way, and you get so many. So let me just go to bearish side. Okay, on bearish side, what are we looking for, guys? We are looking for what? Lower lows and lower highs, lower lows and lower highs, lower lows and lower highs. So the first thing that we're going to identify is when the market is when the price break a structure, right? For example, here, if the market breaks this one, now we identify this one is we are going down. Let me find a clear example, because here the market just went down and no stopping. Okay, perfect. This one here, this one. So what happened here? The market created this low, right? and came up. So now what are we waiting for? We are waiting for the market to break that low. We are waiting for the market to break that low. Then what happened? The market came here, and what happened? It broke that low, this low here. It broke the low and came back. So when it breaks this low, what are we going to do? The last now is last bullish candle because we are going down. So this last bullish candle, we are going to mark that one to identify that one. I use this box like this. Perfect. This is the last bullish candle. This is the last bullish candle going down, right? The last bullish candle that caused the market to go down. Perfect. So now what are we going to wait for? We're just going to wait for the market to come back to this zone. What happened here? The market came back. If I have my 5 pip stop loss and I get triggered in right at the beginning here, what's up? Here we go, 5 pip stop loss and my 1 to 10 risk to reward ratio. This is at minimum 1 to 10 risk to reward ratio. Guys, you can get this very easy, and you can pass Ftmo funding talents very easy, guys, very easy. So there goes a strategy, a very easy strategy that you can use in each and every market. I use this on a higher time frame. If you need another video me talking about this again in detail, because I was rushing, I don't want to make this video too long, please leave it in the comments section down below, and I know that you guys want me to make another video about this. Thank you guys for watching, and I hope to see you in the next one. Thank you. Don't forget to subscribe, like, and share. Peace out.